Between April 1st and April 22nd, the NASDAQ lost over 6.5% of its value. Now, the most commonly heard narrative was that the market is giving up hope for a Federal Reserve rate cut in the near term and that interest rates across the curve will be held higher for longer. Now, for some context on the Fed's apparent pivot, just back in January, the Fed funds futures market was pricing in the probability of 170 basis points of Fed cuts by the end of 2024. That number is down to only 32 basis points, this according to the CME FedWatch tool. Now, this week begins the important tech earnings season. Facebook reports on April 24th, and both Google and Microsoft report on April 25th. Adding to the potential market confusion will be the release of GDP and core PCE on April 25th, which is the Fed's preferred inflation measure. Expectations for PCE are up 3.4%, which is a significant jump from last month's read of up 2%. Now, Apple earnings are to be released on May 2nd, and Apple could be an interesting flashpoint as it's already down almost 18% from its highs back in December and seems to have lost some of its leadership role in the NASDAQ, presumably to NVIDIA, which doesn't release to the end of May. Now, if a trader believes that the NASDAQ could continue lower from here, they could express that by selling the June micro E-mini NASDAQ 100 futures contract at 17,590 and target a move to the January lows of 16,550. A stop for this trade could be placed above at 18,200. This trade can make $2,080 if the target is reached and risks $1,220 if you're stopped out of your level. If a trader believes that the NASDAQ could bounce from here, they could buy that June micro E-mini NASDAQ 100 futures contract at 17,590 and target a move back to the highs at 18,500. Now, a stop for this trade could be placed below at 17,100. This trade could make $1,820 if the target is reached and risks $980 if you're stopped out of your level.